Welcome back to the Daily Factor, and we're glad he is back. It is none other than Herenia Capital Advisors Portfolio Manager, PETRI Redingling. Petri, it's good to have you back. Good afternoon, and thank you so much.
Sorry, last week was a little crazy, man. Financial
Nah,
year end and all sorts of stuff.
no.
Um,
We're just happy. We're just happy that you're back. That's the most important thing. Petri, I'm gonna leave the floor to you.
all right, well, market's not so happy that I'm back, maybe. Top 40 index down today around just over 0.4% at this stage. Okay, interesting things that happened. Last week, Friday, we closed, the US market closed. The S&P 500, the Dow Jones Industrial Average, and the NASDAQ, the tech index, all closed at all-time record highs, right? So we saw a couple of things that happened. One, employment data from the US was better than expected. More jobs were created than anticipated. And two, that inflationary pressure seems to be not quite as bad as what was anticipated. So this whole narrative around transitory inflation seems to actually have a little bit of credence, right? So yeah, the market took that as a strong positive, and we rallied very, very hard into the close during the US session on Friday. And world, or at least US equity markets end the week on a record note. Also, another interesting observation is that we had 7 record highs in a row, 7 trading sessions in a row. So it's a week and a half essentially of every day the market making a new record high in the US. And it's the first time that we've seen that since, I think, 2006 or 2005 or something like that. So historically, that's a relatively bullish signal as well. So the market in the US looking really good. Market in the US today, however, is closed. 4th of July was yesterday, so Americans having a bit of a public holiday to celebrate their Independence Day today. And that means that our market was kind of left wayward in the wind or wayward in the sea without a rudder, right? Usually international participation in our market is sort of the key driver, at least directionally, for our market. So our market under a bit of pressure today, and also some things working against us, right? We saw, I don't know how to pronounce it, Didi, a Didi. It's spelled D-I-D-I. It's a company in China that basically bought the Uber franchise in China and had a ride-hailing app. Chinese authorities removed that from the App Store, which created a lot of fear around what potential regulation could be like or look like in future for Chinese big tech companies. Of course, Tencent got a bit of a fright off the back of that, and that sort of fell. It was down around 5% at one stage, but it ended the day at about 3.6% lower, which of course put quite a bit of pressure on our local market. So currently Naspers is off the lows, if you could believe it, but it's still 5.9% down on the day, right? So that putting a bit of a damper on us, plus very low volume traded because the US market's closed, so the rest of the world is kind of on a go slow, if you will. So not the world's most exciting day on our market, and also perhaps not the best start to the week either, right? In any case, looking at the indices, I just want to refresh so I'm sure I got the latest stuff. The top 40 index down around 0.4%, so just about 0.5% lower in the day. Industrial index down 2.1%. For the resource 20 index positive by 1.6%. Industrial 25 index 2.25% lower. Of course, that includes Naspers. The financial 15 index up 0.75%, so that's not too bad. Precious metals and mining index up around 1.25%, which is also, I guess, not too bad. JSE retailers down 1 2/3%. So we're seeing that all those. We didn't really speak last week, so I had some hope for the retailers, but unfortunately, it seems that hope is fading once more. I think a lot of this to do is with the rand as well. The rand is actually, it's fought back from the worst. It was trading at 14.31 rand at some point. It's currently trading at 14.26, so that's about 0.1% weaker. But 14.31 definitely wasn't looking, very great earlier this morning, and that obviously puts a little bit of pressure on the local stocks, which is retailers and banks. Versus the euro, we're practically unchanged, 16.91 versus the pound, we're also around 0.2% weaker, which is trading currently at 19.74 rand. I've jumped over the international markets. US obviously closed today, but in Europe, markets are open. FTSE 100 index up 0.6%. Germany, the DAX is up 0.1%. In France, the CAC 40 index is up around 1/3%. Moving on to commodities. Sorry, I'm a bit lost now because there's no American markets to quote here. So commodity prices, gold price is about 0.5% higher, trading at $1,791.65 a fine ounce. Platinum price trading at $1,094.85, which is around 2/3 of 1% higher. The Brent crude oil price unchanged, trading in London currently at $76.20 a barrel. So this is a big number to watch because we've got the OPEC Plus meeting coming later this week. So we'll see what happens with terms of oil price, oil production output. Anticipation is, well, it's a bit of a mixed bag because you've got a bit of a spat between some of the major players in OPEC, or at least within OPEC Plus, and we also have what was actually lower than anticipated forecast demand for oil, right? So they're forecasting how much oil demand they could potentially be by the end of the year, and taking things like the global recovery or global reemergence from the pandemic lockdowns and so on into account. And that forecast demand is actually lower than anticipated. So that means that if there is a production, or at least this is my expectation, if there is a production increase, it's likely to be lower than what we think it's going to be or what is expected for it to be, which could potentially be bullish for oil prices. But for now, we have no idea. We have to wait for the the outcome of that OPEC meeting. And also later this week is the Federal Open Market Committee in the US, the FOMC. They're releasing a minutes of their meeting, which should give us some guidance as to in terms of what they're thinking around interest rates and what they're thinking around potential additional stimulus or tapering of that stimulus. So that's going to be a big one to watch in the later part of this week as well. So for now, I mean, markets are relatively quiet. Not really too much going on other than, Nasdaq really just kind of feeling the heat and the world holding its breath waiting for OPEC.
Yeah, and I think those two meetings are going to be quite important, OPEC and, of course, the federal. So we'll definitely be chatting later on in this week about this. Petri, we say thank you so much, and we'll chat to you again same time, same place tomorrow.
Thank you very much.
PETRI REDELINGHUYS from Herenia Capital Advisors with our daily market updates.